From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Here's today's lineup. K-State's Dan O'Brien standing by for his weekly commentary on the grain market trends. This week, he'll look at the market carry being created by the inverted grain futures prices, and he'll talk about what's been going on of late with local grain basis at Kansas delivery points. Also today, K-State's Romulo Lollato offering his thoughts on the current state of the Kansas wheat crop as it emerges from dormancy, and he'll talk about the first hollow stem stage of wheat development as a signal that you dual-purpose wheat growers should remove your grazing cattle from those stands. And K-State's Chip Redmond awaits to talk about the Kansas agricultural weather outlook. Here on Agriculture Today. You're listening to Agriculture Today here on the K-State Radio Network. It's our Friday edition, and we're glad to have you along with us. Into the grain markets we go, a place that's not for the meek, that's for sure, given the rampant volatility in these trades that persists. And we're talking once more now with grain market economist Dan O'Brien, K-State Research and Extension, from his office in Colby, Northwest Kansas. Given all of the movement in these markets, though, Dan, and we'll open with this, you suggest that maybe they're starting to establish something resembling a trading range.
It sure seems to be so. At least in the past, as we've observed, very volatile, higher markets, as we've seen, that will tend to run up in prices. And then once we got to a place where we have momentum fatigue, then we have tended in past either to crash altogether if we found out that the underlying assumptions that we thought were on supply demand that were driving these markets are false, or if they hold true, we tend to go into a trading range. Just interesting to see, since we've ran up in, say, May corn, that we've traded in a range pretty much of 725 to 775 and closed yesterday almost dead in the middle of that at 754. For wheat, we've gotten into a trading range of about 1050 up to, on the very top, about 13, closing towards the lower end of that as of yesterday at about 1092. And we've seen a whole lot of volatility just within the last week in the wheat market, but we're still within that trading range yet where we've been at. We look at soybeans. We've ran up into the trading range of about 15. This is for the May contract, 1575 up to a high of about 1760. Closed yesterday, again, almost right in the middle of that at about 1668. So again, you look at these markets, a lot of volatility. News comes out, people are reacting to whatever's hitting. But in a way, it's almost, I wouldn't say it's comforting, but it's somewhat reassuring that we're in a trading range. We know we have issues on the supply-demand side in the world markets, a lot of it caused by what's happening between Russia and Ukraine, but also some South America issues, also some issues for palm oil off in Southeast Asia, of all things that would affect us, but it is affecting us. So we've got trading ranges established. We have volatile markets, but we're tending to find, it seems like, some consistency in the futures, even at these high levels.
Dan, these remain, again, as has been talked of repeatedly, inverted markets, and that's indicating immediate demand out there. And this is being reflected in the market carry, as you've observed it.
Yes. When you look at the corn futures complex, from the leads into the deferreds, we have the May contract right now in the lead, and March has gone off the board. May contract, again, trading at 754.5 yesterday, as we talked about. D's trading at about 645, and you've got monthly declines, again, i.e. an inverted market during 2022 on these contracts from May to July, about 18 cents a month. Inversion from July to September, about 26 cents a month. And even from September to D's at about 7.5 cents a month. But what I find interesting is that you go beyond D's and look at that next year, it looks like the market is trying come into some settled structure. There's actually a slight positive carry. It's almost comical in that March is at 645 and a quarter yesterday, May at 645 and a half, and July pretty similar, just down a cent or so. Anyway, it seems like we're trying to move beyond the issues of this year and trying to look out into that next year and are anticipating a more stable market situation. And then, of course, once you get from July at 643 and three quarters down to into September at 590, you've dropped 40 cents, looking at more of a normal harvest situation. So that's of interest there. The market that was really causing the fireworks, though, is the wheat market. When you look at that, we still have, I think that the position of the futures tell the story of the expectations of how the market thinks will unwind, what the market is voting right now in terms of prices, how it thinks will unwind this current supply-demand situation that we're in. So again, May closed yesterday 1092 and a quarter, then July 1083, September 1058, D's 2022 1033. So you're losing about 4 to about 12 cents per bushel per month on down through that marketing year. But then it's kind of opposite of corn. Then you're heading off into March of 23, May of 23, July, particularly going March to May, you're dropping 31 cents a month. From May to July, you're dropping 62 cents a month per month, and moving down a little bit then into September. So it seems that the market's anticipating that our current troubles will resolve themselves out there into 2023, that we'll plant a crop, that we'll be able to harvest it, and they're anticipating a fall off into that harvest of 2023, all that much more than what they're even looking at now for this year. I should add in soybeans too while we're on this. Again, it's interesting to see from May to July, a drop off about 10 cents per month, but then you go from July to August, 43 cents, from August to September, 81 cents. 81 cents in 1 month. And then from September to November, about 26, 27 cents. So it seems that the grain markets, through their futures bids, are anticipating that by the time the U.S. crop comes in, they're indicating that they think prices will fall off pretty sharply. They're still, like November is still 14.69 on yesterday's close. But in terms of the relative position, they're looking at prices falling lower off into harvest. We get a new crop, a good harvest coming in the United States, and that would affect the market in a downward manner. Still tremendous price bids, and we see that actually off in the new crop bids too. So still high prices, but these patterns are showing, I think, what the expectations of the market are as we try to unwind things the next 12, 18 months.
It's interesting. Bears watching for sure. What are you seeing on the local cash grain bid scene around Kansas, Dan? Anything out of the ordinary from what we've recently witnessed?
Well, ongoing strength in Southwest Kansas and cash corn bids, and even in grain sorghum bids. Whereas, well, you have a 46 cent positive basis bid yesterday for the spot price in Garden City, and then the next best basis bid was 18 under at Hutchinson. Most of them are running 29, 30 under, 36 under. There's, probably the weakest basis bid, spot basis bid, is in around the Salina market, at least that I could see, at 54 under. So anything but a level corn market across the state. You have a lot of variability, and especially in that demand center down Southwest Kansas, you really see that. That's probably truckable, haulable, transportable price differentials if people have grain to go search out these differences. But again, you're limited by miles in doing that, but still there's some huge price differences around the state of Kansas. Soybean basis bids, you can see at Topeka, in particular, a strong spot basis bid, still over $16 for cash bids in Salina and Hutchinson, but then you break down closer to $15.50, $15.70, $15.90 something as you head to other parts of the state. Weakest in Northwest Kansas for soybeans anyway. Then really for wheat is we've been haranguing over wheat prices, wheat bids, wondering where things are going. The top bids in Salina, Topeka, Hutchinson, the export-oriented markets, about $10.50, $10.53, something like that. Then you move down to around 10 to below 10. Once you get into Colby and Columbus, different parts of the state, and Garden City, still closer to 10 at about 10.13. So again, we're really seeing differences in the state based on what the demand centers are for these crops, and it's just really expressing itself.
Right. Do want to finish up with a quick glance to the latest from the grain export tally sheet. Corn and soybeans doing okay, but wheat continues to drag its heels, and one wonders if it's priced out of the market to a certain extent. What's going on to your thinking?
Well, to the chagrin of our wheat organizations in the state, we haven't had strong wheat exports yet. Now, with the concerns about Ukraine and their ability to get a crop out, what could happen with Russia and their ability to trade, you've got a lot of concern around the world with regard to having adequate wheat supplies. But it doesn't seem yet to have expressed itself in stronger U.S. wheat demand. We're still, as of the latest USDA Foreign Ag Service numbers that come out representing the situation on March 10th, we're about 86% of the way in terms of what's been shipped and bought ahead to the USDA's 800 million bushel projection, and we're about 79% of the way through the marketing year. So that's almost, it's not hand to mouth, but it's not far ahead. People are buying their needs as they go. Compare that to corn. Of course, that marketing year starts September 1, so we're about 52% of the way through the marketing year, about 82% of the way bought, shipped or bought ahead for corn. And for grain sorghum, about 88% of the way shipped or bought, and again, 52% of the way through. For soybeans, we're 94% of the way shipped or bought towards meeting the USDA's projection at 2.09 billion bushels. And again, we're 52% of the way through the marketing year. So at least as we sit today, before really anticipated demand comes into the wheat market, we've got the other markets, corn, grain, sorghum, soybeans running a bit ahead of wheat in terms of the export market and what's, quote, on the books to be shipped yet.
Dan, many thanks to you as always.
Thanks, Eric. Take care.
On the grain markets, Dan O'Brien, grain market economist, K-State Research and Extension. You're listening to Agriculture Today. Agriculture Today returns. As we're moving ever so steadily now through the month of March, that means that you wheat growers are paying more attention in all likelihood to what's happening in your stands now as they break dormancy. We have brought by now Romulo Lollato. Of course, he's a wheat production specialist, K-State Research and Extension. And what we'll talk about today is the stage of wheat development called first hollow stem and how producers can track that. Before we dive into that, though, Romulo, your latest assessment of winter wheat in Kansas. It has been hurting for moisture in a lot of locations. That's been indicated repeatedly.
Most definitely, Eric. So good morning and good morning to everyone listening in. Thank you for having me on air here again today. So absolutely, Eric, let's cover what we're seeing around the state in terms of the wheat crop. And drought is the predominant thing that we hear and that we see around the state as well, as we're now traveling and getting a lot of our own field work done in our trials all over the state. So we are seeing that the crop is suffering from drought stress anywhere from like locations that we have in central Kansas, like Hutchinson and Belleville and Solomon, all the way to locations where we have in western Kansas, like Leoti and Garden City. So that has been the predominant talk. Whenever we talk of the crop conditions as well, I think it's important for us to mention that the stage of development is quite variable around the state for a few main reasons, right? If we think of western Kansas, there were a few precipitation events in September, and some growers took advantage of that, and they planted quite early to take advantage of that precipitation event. It grew quite a bit. There were quite a few fields out in western Kansas with what we call very big wheat. That uses more moisture as well. So it's kind of like we have that effect of the moisture stress being even harsher on some of those early planted crops. More in central Kansas here, typically the crop planted after wheat was planted on time. Then we have a small crop that got planted after soybeans and we didn't have the chance to get much tillering during the fall, mostly because, again, of dry conditions. So conditions during the fall and winter were quite dry. So except for that crop that got planted pretty early and took advantage of that, a lot of the crop was actually kind of like slow and behind in terms of tillering potential. Now, it's interesting that we had a couple of very cold spells during the winter, right? And that seemed to hit the crop differently as well, depending on how far along the crop was or how big the crop was. in our own trials near Hutchinson, the crop that was planted early, and by early I mean around September 20th, with the intent of dual purpose that we're going to talk here in a minute, it got burned back really bad in terms of that cold spell. So it lost a lot of leaf area, a lot of vegetation. I don't think it's actually hurting in terms of losing stand, but it did lose a considerable amount of leaf area, whereas the smaller crop that was just like 2 or 3 killers, it seemed to have taken that spell better. Now, important to notice that we're not talking about the small crop that has no killers, right? We're talking about still a crop that had 2 or 3 killers going into the winter, and it took it pretty well. So those are some of the observations that we have going on around the state in terms of crop conditions. So again, drought being the predominant factor across the state, and this difference in crop development depending on planting time and moisture conditions at planting also impacting not only the status of the crop now, but its response to the couple of cold spells that we have had over the winter.
And naturally, the key question from here, as we're seeing moisture in Kansas, how much will it take for the crop to progress and get past these droughty concerns? Any level of moisture from here forward has to help some, Romulo.
It will be beneficial. We usually say that total in the growing season, and counting with the amount of water left in the profile at planting, right? We need about at least a good 4 inches or so before the wheat crop starts producing some grain, right? Because that's the amount of water that is simply lost to the atmosphere through evaporation or percolation down the profile. So at least those 4 inches plus for the wheat crop to start producing grain. Now, how much is the available water? It depends on a number of factors. The crop can be really efficient in using the water that it gets if that water is timely. There are some very high efficient there in terms of how much grain can be produced per unit of water that the crop receives. So, but it needs to be timely, right? And definitely we will need that moisture now to put whatever fertilizer has been put out in the field into the root zone and to allow the crop to continue tillering for any potential that it still has during the spring. But especially because from now on, between the start of the stem elongation where we are now until that heading stage is the steepest curve in terms of water used by the crop.
Let's talk for a moment about the first hollow stem stage of wheat development and a tool that's available to producers in gauging when that may be happening. But what is the importance of knowing when first hollow stem is, in fact, taking place out there, Romulo?
So, Eric, first hollow stem is a very important threshold on the wheat crop development time for those growers who are growing wheat for dual purpose. That I mean, cattle are grazing now for forage, and we're going to harvest the crop for grain later on. So the first hollow stem is the stage of the crop when we can actually maximize the amount of forage harvested by the cattle while minimizing grain yield losses. Of course, the longer the cattle graze out, the more forage is going to consume, but we start hurting our yields, and it can be a pretty steep curve from the first hollow stem time on. So think of the wheat crop development now. There's a tiny little head being developed at the crown of the crop that currently, for most of the state, is underneath the soil, right? First hollow stem is when that crown starts being pushed upwards, and that head, the developing head, is going to be on top of that first hollow stem. It's going to approach the soil surface, and eventually it's going to be above the soil surface. So at this point, and whenever that first hollow stem is actually underneath the soil, the developing head is underneath the soil, or first hollow stem less than about half an inch, cattle is mostly grazing forage. And so yield losses from that dual purpose system, they're going to be moderate, right? We can maybe look at 10-15% yield losses if we're managing termination of grazing correctly. Now, once we start allowing cattle to graze past first hollow stem, we can see yield losses as high as about 5% per day when the cattle are grazing that crop. And so yield losses become very steep because beyond that point, cattle starts grazing not only the foliage, but also the developing heads. So the yield potential of the crop really goes down steeply.
The question then becomes, how can a producer know for sure when first hollow stem is in place? And that would be the signal, again, to pull those cattle off. There is a handy tool on the Mesonet website out of K-State which allows a clue toward that.
Absolutely. So How do we figure that out? Of course, it is on a field-by-field basis, and what we recommend is that if growers are great, or if growers have cattle grazing a given field, that they sample that specific field just outside the fence where cattle have not grazing there yet, right? And so they pull plants from just outside the fence in that specific field. They split the stem open of that variety, and we look for that developing hollow stem, and it needs to be approximately the diameter of a dime or shorter, and then we remove the cattle out of it. So to try and help facilitate growers in that decision, we expanded a tool that was developed by Oklahoma State University and the Oklahoma Mesonet to Kansas. Across 6 years, we have been collecting in our own program of first hollow stem. And it turns out that the tool was very accurate north of the border as well. And that first hollow stem can be predicted here in Kansas based on accumulation of soil temperature for each depth. So right now, the tool is simply getting data from the entire state, from all the Mesonet stations that we have spread out around the state. It's accumulating that temperature above a certain threshold as the model developed by Oklahoma. And we have a prediction of probability of a given variety reaching first hollow stem. And now we only have two models, either a late variety or an early variety, right? And so if growers know what variety they have, for example, they have Sanda, which is a relatively early variety, or they have WB 4269, kind of an early variety as well. Or if they have Joe, like a later maturing variety, or LCS Chrome, a later maturing variety as well, they can simply go to that page that we have on the Kansas Mesonet now, which is called Wheat First Hollow Stem, and they can select whether it's a late maturing variety or an early maturing variety, and it's going to give the probability that that variety is reaching first hollow stem. If it's a 0% probability, it means that, well, okay, that's fine. We probably still have some more time before we need to start checking. Now, if we're saying 5, 10, 20, 25% probability that a given variety is reaching first hollow stem, then absolutely I would go ahead and start checking for that first hollow stem in those fields so growers can remove cattle before we start having more steep yield losses in that field.
It's a very simple to use tool for those of you who do grow wheat for grazing as well as grain production purposes. It's as easy as going to the mesonet.ksu.edu website and look for the first hollow stem tool for wheat. Romulo, we will catch up with you frequently in the next few weeks. Thank you for your time.
Thanks, Eric.
Romulo Lollato is a wheat production specialist with K-State Research and Extension. We'll be back on Agriculture Today. Now on Agriculture Today, a look at Kansas agricultural weather. And from the Weather Data Library here at K-State, Chip Redmond joins us, Research and Extension meteorologist. And Chip, as we speak, moisture in Kansas, form of rain or snow, depending on where you're at in the state. Totals are still coming in from the Mesonet weather system from around Kansas. But suffice it to say, very welcome moisture indeed.
Yeah, this moisture is much needed, especially in western Kansas, southwest Kansas, south central Kansas. So we're hopefully squeezing out up to a half inch in most of the places, a little bit less in the west, but they have snow, so it'll soak into the ground better, and then up to an inch in parts of central and eastern Kansas.
And that's music to people's ears right now, for there's a lot to be caught up in as far as the drought monitor is concerned. The latest version of that indicated such, right?
Yeah, even with the snow last week, that was mainly just northern Kansas. We saw extreme drought added to central Kansas, as well as growth in severe drought and even moderate drought. So this moisture will hopefully be enough to offset at least worsening conditions for the next week or so. But, we average anywhere from about an inch in the southeast to 3 to 4/10 of an inch in the west. So this event will bring us about average for the week, unfortunately.
Yeah. Now, we might look ahead. We've an open weekend by and large, according to the forecast, but then a string of moisture chances, mostly in the form of rain, next week. That's, again, adding to the upbeat tone of this forecast.
Yeah, let's ride that positivity.
Yeah.
A really ample storm system coming in Monday that's got a great fetch of Gulf moisture. We're going to be on the north side of it, so we're going to have persistent showers and thunderstorms on Monday, starting in the west and then spreading eastward across the state. And it looks like a soaker for everybody. And then as the system starts to slide out on Tuesday, it looks like a band of snow then develops with the colder air that'll only be in place for a day or two. But that band of snow also traversed most of the state. In the end, it looks like 1.5 to 2 inches widespread moisture, especially in the favored areas of central and east Kansas, but up to an inch in west Kansas. And that, when you add that into what we are getting right now, that ends up being a very positive note for the week.
It's been a long while since we could talk about that saturation, if you will, over a wide area. Is this, do you think, Chip, a signal, now that we're seeing these weather events, that the dry pattern that we've been so bogged down with might be giving way here?
I wish. Unfortunately, we're entering spring. We're going to get more storm systems like this. However, the trend is definitely towards warmer conditions as we go into the end of the month into April, and then drying conditions. In fact, the new outlooks just came out for April and put all of Kansas in a favorable below normal precipitation and above normal temperatures, as well as the 3-month outlook into June now. That average over those 3 months is expected to be below normal precip and above normal temperatures. So good short-term relief to hopefully add some needed soil moisture and maybe give the wheat a boost, as well as really boost green up as we enter in the spring season. But unfortunately, it may be very short-lived.
Now, just to point out before we let you go, below normal for April doesn't mean that it won't rain. April is typically a fairly wet month.
Yes, it is. I don't have the numbers in front of me right now, but it's about the third or fourth wettest month of the year, and we trend upwards even more into May. So we need a lot more moisture to break even for April. So below average doesn't mean no moisture. It just means that we'll hopefully have enough adequate, timely precipitation to at least offset the below average precip amounts.
Chip, thanks for taking a few moments. We'll talk again next Friday.
Enjoy the rain.
Chip Redmond, meteorologist with K-State Research and Extension. Our time's away once more, not only for today, but for the week. So a good weekend to you, and thanks for listening in. Eric Atkinson for Agriculture Today over the K-State Radio Network.